Hello, everyone, and welcome to Peabolic Notes. My name is Michael Crichton. Today is Saturday, June the 25th, 2022. Welcome to my channel. The topic of today is going to be a very important one, is to look at really the interest rates, what's going on with the US Federal Reserve, the way it's hiking rates to fight inflation, and also how that's having a direct impact on, of course, all the risk on assets, such as Nasdaq and especially Bitcoin. And so I'll look at all these charts with you and look back to 2000, 2008 as well, and just kind of show that we're not really at the bottom yet, based on what we've seen from the past. Of course, before I get started, it's not financial advice. Full disclaimer, I'm not a financial advisor, just an investor in the space, and please do your own research. So let's get started by looking at the charts. I'll share with you my computer screen. And I'd like to show you what's going on currently with the US unemployment rate. It's one thing that it's important to look at, first of all, just to see that this is the source for this is the website Trading Economics. So the US unemployment rate is really right now very weak. So obviously mean that it's very strong, mean that the rate is very low. So since the US unemployment is at record highs or record lows really, and the Federal Reserve really pays a lot of attention to unemployment and also to the inflation rate. Them seeing this and this being really a lagging indicator, meaning that the unemployment rate isn't really going to be telling us everything properly because it's always lagging. But then by them seeing this and then them looking at, of course, what's going on with the inflation data, with inflation being at record highs, as we already know, we know for a fact that since the inflation is at such high numbers, they're still fighting this by increasing the Federal Reserve. And I'll show you the chart of why this is very important to pay attention to. Because the Federal Reserve, obviously, even though we see that currently it's at around 1.75%, their Fed rate, it's nothing close to where it was really back in the old days when it was much higher than that. But of course, with today's numbers, with today's total world debt, government debt, and personal and business debt, I mean, going at much higher than these numbers, it would be almost unsustainable. But if you look at what's going on with this, is that since the Fed is really in a hawkish mode, meaning that they are increasing the rates to fight inflation, that has a direct impact on the risk on assets. If you look at in March 2000, where the Fed fund rate was again at a highs, what did that do to the treasuries? Well, obviously, if you look at what they did with the US treasuries, I'll show you the chart for you that we can see exactly what I'm looking at with the US treasuries. Here is the 10-year US treasuries chart right here. So obviously, again, if you look at March 2000, so what March 2000 was going on with US Treasuries? US Treasuries were at record highs. Of course, at US Treasuries being at record highs, what did that do? It basically had a direct impact on Nasdaq because, of course, Nasdaq being a risk on assets. So here it was in March 2000. This was the high, and of course, we remember at Y2K with the .com crash. Nasdaq went down from 5,000 points all the way down to something in a range of really, it was a catastrophic. It went down to almost 1,000 points. So that was basically almost an 80% drop for Nasdaq in the year 2000. Of course, we can't associate the full drop to what the Fed did, but of course, it was all all correlated. Rates going up, Fed rate going up, the tech stocks being overvalued, and they all had a massive meltdown. If you look at what's going on, basically, if we look at the GFC, the global financial crisis of 2008, it was similar. In the GFC, again, May 2007, Fed fund rate is at a highs relative to the prior periods. And of course, May 2007, if you look at what was going on with the actual 10-year treasuries, here they were again coming at the higher range of that this downwards slope. We know, of course, that the U.S. treasuries have been going downwards quite a bit for the last 40 years. But again, if you look at what was going on in May 2007, again, it was going up. It was hitting these higher ranges of the chart. And what that did, of course, was we saw the meltdown we had again with Nasdaq and risk on assets. And the link there seems to be that when the interest rates are going higher, then all of a sudden for investors it makes more sense to be maybe in risk off assets and take some money off the table. And of course, when there's selling pressure going on at the same time, it creates more downward pressure and then creates these meltdowns. So again, 2007, what it did was Nasdaq went from 2,800 points all the way down to 1,200 points. So that was a good 60% drop for Nasdaq. So again, almost 100% linked to what's going on with the U.S. Treasuries and with the Fed funds rate. Now let's come back to today. Today, what are we seeing today? So basically, here we are, Nasdaq Composite, and of course, we see the Nasdaq Composite had hit its all-time high, something in the range of approximately 16,000 points, and that was again in November of last year. If you look at what's going on in November last year with the Fed funds rate and so forth, so you see the Fed fund rate wasn't really doing much back then. It was just about to start the increases, because back then in November 2021, the Fed funds rate was something in the range of around 1%. But of course, if we go to what's happening with the actual treasuries in November of 2021, we see that the treasuries were already quite a bit higher, because from the prior lows of the 2020s, treasuries were at around 0.6%. All of a sudden, last November, they were at 1.4, 1.5%. So that was really a 150% increase of the U.S. treasuries compared to the prior period. Even though it's low rates, still had an impact, because this started off the correction with the Nasdaq, and of course it's continued. And this, we know, it correlated with what we saw with Bitcoin, because Bitcoin also at the same time, if you look at what's going on last year, November of 2021, it was really the all-time high of Bitcoin, if you recall. And after that, we've been really in this bear market territory. So that's why what we're seeing now, of course, it didn't stop there. So it kept on going higher, because as we saw from the previous chart, the inflation being high and unemployment being low, the Fed was really still increasing its rate, still being hawkish. And instead of the U.S. Treasuries really having stopping or having a correction or having staying at same ranges, they kept on going higher. So right now the 10-year Treasuries are at over 3%. So that really explains what's going on with our risk on assets. And of course, this massive correlation between Bitcoin and Nasdaq clearly explains that we're not really at the bottom yet, because we're not seeing any downward movement here. We're actually seeing them being even more hawkish, inflation being still higher, meaning that they're still going to be probably increasing the rate a little more in coming meetings. So these U.S. Treasuries, they may stay the same, because they've already priced in the Fed fund rates. They may go slightly higher. I wouldn't forecast these things going really much higher than where it's at today. But of course, Nasdaq, it clearly shows that when its all-time high of last November was around 16,000 points, today it's around 11,000 points. It hasn't really done a massive drop, really. I mean, even though people have lost a lot of money, but it hasn't really done a massive drop, meaning that we could still be going much lower than where it's at right now. Unfortunately, it doesn't mean that in the meantime it would not be doing rallies, because as we look at the prior cycles, you see over here there's always retracements. It doesn't go straight down. There's going to be rallies, people taking profits and so forth. Same thing again in Y2K as well. Look at all these beautiful rallies it had, multiple rallies. So these were all profit-taking opportunities. But for those who held on, they saw it unfortunately go down all the way down quite a bit, by almost 80%. So if you look at where Nasdaq's at right now, so we see that potentially over the next couple of months, it could come and hit this support line, which is really at the rate around 10,000 points. That will be basically an additional 1,500 points drop compared to where it's at right now being around 11,500. So that means that there's potentially at least another 10% drop that may happen in coming months. Of course, not financial advice, just this is my looking at the charts and looking at the past history as well. And if I look at what that would mean for Bitcoin, that would be really one of those things where if this correlation remains, then that means unfortunately Bitcoin may go lower as well. Now it doesn't have to go lower, because it's already at such a low. Because right now the point we're at right now with Bitcoin being at around $20,000, it basically means that every single investor, every single token buyer that got involved in Bitcoin or bought anything as of December of 2020, right now and they've held on, every single person has lost money. So really, it's unfortunate, but this is how the reality of it is. If whoever bought Bitcoin starting from this period where it was all these highs and so forth, and whoever still held on to the tokens, their coins, right now they're basically at all those guys right now are losing money because right now they're all basically at 20,000 and they all had bought at above 20,000. Now, if Nasdaq does go lower, which and the charts, the treasuries do tell us in the next coming months it might. If it does go lower, what would that mean to Bitcoin? Does that mean that Bitcoin may go lower as well? Where is the next support line? Well, the next support line is around 12,000 US dollars. We're not seeing much happening before that. Does that really mean it has to go down all the way that low? Well, not really. I mean, it may just stay around here. Really, it doesn't mean that just because it was correlated massively with Nasdaq in the past doesn't have to be staying at the same correlation. But we should just be wary of this. Just pay attention to this. And if we're going to be investing in the space, it's important to not be overwhelmed or really concerned when there are corrections, because we do see that the macro environment that we're in right now, it is telling us that we may be in correction territory. So just in conclusion, and obviously myself, I truly believe in this space, and investing in the Nasdaq and cryptocurrencies, as long as you're picking your tokens properly and your stocks properly. Obviously, in the long term, it does make sense, but in the short term, it is looking very rocky, and it's very important for us to kind of really understand where we are at in the actual cycle of this chart. Thank you so much for watching, everyone. Bye bye.